We did one. So decision makers accounting as an aid to decision making, we already know. Theory है, पढ़ लेना अपने आप, right? And this is the process which we described yesterday. This is a summary of what we said yesterday, but in a different slide. So we have economic events which are analyzed and recorded. So we discussed this yesterday. Economic events are called what? Economic events are called what? Transactions, right? So transactions are analyzed, and what did we say? Marriage may be an extremely important event, but it's not a transactions, and transactions are analyzed and recorded, and accountants analyze, record them, summarize them into financial statements. What was the process I mentioned yesterday? Very briefly only. I said first you pass journal entries, then journal entries are posted into ledger accounts, then we prepare trial balance. Based on the trial balance, we prepare profit and loss account and balance sheet. Also you can prepare the cash flow statement, right? So that's the essence of summarizing into financial statements, and then it's communicated to users. That's what we discussed yesterday, but today it's being shown in a flow chart. And these are who are the external decision makers, who are the internal decision makers, we briefly spoke. So what is an annual report? Annual report is a document prepared by management and distributed to current and potential investors, and basically the financial statements are presented in the form of an annual report, which contains not just the financial statements, but lots of other things also. What are some of the things that the annual report contains? It informs about company's past performances in the terms of annual report, but it will also have a director's report which will explain everything that the company is doing and what is the strategy of the company, what is the vision of the company with respect to various businesses. So all of that will be explained in the annual report. And so it's used by investors and outsiders also, because whoever is wanting to deal with the company uses it. And what are the contents of annual report? One, financial statements, then there is a letter from the corporate management, there is a director's report, that's it. Then we have discussion and analysis of economic events, which is contained in the director's report. Then we have footnotes explaining elements of financial. So one, we have the financial statement like say profit and loss account, balance sheet, cash flow statement and others, and then they will have notes to accounts. So what does notes to accounts contain? Notes to accounts contains description of accounting policies and practices being followed by the company. So for everything, there, like for depreciation, we have not yet seen those terms, but broadly speaking, if you buy an asset, then you have to allocate the cost of the asset over its useful life, which is called as depreciation. So if you buy a car, let's say for say 10 lakh rupees, and if the life of the car is say 10 years, then you say that yes, I will depreciate the cost of car over the life of the car. So I will depreciate 1 lakh rupees per year, because I paid 10 lakhs for it, life is 10 years. At the very elementary level, there are other ways of depreciating, but at a most elementary level, we spread the cost of the asset over the life of the asset. Yeah. So that's what so similarly, there are other things also. Similarly, you have policies say for inventories, right? So you will value inventories. We will see it later how they are valued, but there is an accounting policy or accounting standard which says inventory should be valued at lower of cost or market value, right? This is the simplest version of explaining how inventories are valued. Inventories are what? Goods that you sell, right? So if you are in the business of selling shoes, so your inventory will have at least thousands of shoes, right? So on. So it will explain for every item of asset or liability, it will explain the accounting policies that were followed. Then there will be report of auditors also, right? So auditors have to certify that the financial statements have been prepared and they are showing the true and fair view of the business, right? And financial statements have been prepared following the accounting guidelines issued by Institute of Chartered Accountants of India, and they are showing the true and fair view of business. So that's what the auditor's report says. And there are other elements such as, these days they have something called as ESG report, and a lot of other things also have to be disclosed. So these are some of the biggest things that are disclosed in a financial annual report, and we will discuss these things in greater detail at an appropriate stage. So what are some of the basic concepts of accounting? We have discussed this yesterday itself. It's called as business entity concept or separate entity concept or legal entity concept, and which says the entity is separate from the owners. So when we do accounting, we will do accounting for business and not for the owners, right? Because when we, and the simplest example was Sam Doty invested 8,000, right? So if you are accounting for business, you say business has received 8,000 and for that business has issued share capital of 8,000, which in US terms is called common stock. That is what we said yesterday. Let us put it now, let us say you are not the accountant for business. Let us say you are accountant for Sam Doty. If you are the accountant for Sam Doty, Sam Doty is a very rich man. He has hired you कि मेरा personal business, मेरा personal accounting करो. So if you are the accountant for Sam Doty, then from Sam Doty's side, what has happened is he is down cash by 8,000. Cash has gone down, but what has he got? He has got share capital in that business, right? So from his perspective, it is investment. So from Sam Doty's perspective, it is investment of in shares. How much? 8,000. So investment in shares is an asset which is up, right? So just as when you buy shares from the stock market, right? You get 100 shares of Reliance, but you are down by 3 lakh rupees broadly, right? So cash down 3 lakh, but 100 shares of Reliance is an investment which is up 3 lakhs, right? So from Sam Doty's perspective, the same transaction, if you are an accountant for Sam Doty, then what you will account is investment in shares of this business, 8,000, cash down 8,000, right? What is the going concern concept? Going concern concept assumes that an entity will continue to exist forever. A business will continue forever, right? So if a business will continue forever, then it's, I will explain why later, it's reasonable to use historical cost. Let us say the business will close down after 1 year. So after 1 year, you know it कि कल business बंद होगा, right? So if you are doing accounting today, knowing the business will close down tomorrow, and if you are valuing the asset, let us say you are valuing the land itself. So the price of the land when you acquired it was 1 lakh rupees, because of whatever bad reasons or anything, or let us say because of good reasons whatever, the price has gone up to 2 lakh. Okay, price has gone up to 2 lakh. Now why think of bad, let us think good. The price has gone up to 2 lakh. Normally we will say, yeah, we will record assets at cost. That's one of the principles of accounting. We will record assets at cost, right? But if the reason it's being recorded at cost is because of this going concern concept, the value of assets can keep fluctuating. So we will, if we don't record assets at cost, but if we record them at current value, then we will have to face all these fluctuations in our books of account, and we don't want to do that. What we want is a straight line, right? That is far better and smoother. Are you getting what I am saying? So what going concern concept does is you continue to record it at cost, and that's the historical cost concept of recording comes from the going concern concept, because well, how does it matter if the business will continue for 1000 years or thousands of years or forever? Then how does it matter what is the cost today? Well, okay, in the long run we will see. Are you getting, have you understood what I am saying? So opposite view of going concern is immediate liquidation. So if you are doing accounting on basis of immediate liquidation, which is the business is going to be liquidated tomorrow, then we will say, if the business is going to be liquidated tomorrow, then let us value the asset not at historical cost, but at what is the value right now. Are you getting it? So that is the opposite of going concern. So what are some of the other concepts? Money measurement concept. So चलो एक और टॉपिक इसी में कंप्लीट कर देते हैं. Let's go back 5,000, 10,000 years back. Yeah. So we are 10,000 years back. There is no money measurement concept. We are in the barter system. I am a farmer. I grow rice. You are a farmer. You grow wheat, and you have some cattle, right? So I have 100 bags of rice. You have 100 bags of wheat. You have 100 bags of dal, and you have 50 goats and 50 cows, right? What will I do only with my, मेरे के पास क्या था, राइस था क्या? मेरे पास wheat था. You have, you, I have wheat, I have rice. So I have rice. सिर्फ 100 bags of rice का मैं क्या करूँगा? Are you getting it? So I will tell her कि यार give me some wheat and I will borrow some dal from her. बोल ठीक है एक बैग exchange कर लेते हैं. So now we have a few bags of rice, few bags of, so we will have that. Then we go to him कि यार हमारे पास milk तो है ही नहीं. So he says कि ठीक है, I will give you 1 cow and 1 goat, but for 1 cow you have to give me 10 bags of rice, and for 1 goat you have to give me 5 bags of rice, right? So now I have enough, right? But if I was asked ki, what is the value of your assets, so I will say now I have, let's say, 80 bags of rice, I have 1 cow, 1 goat, and maybe 2 bags of dal and 3 bags of wheat, right? So this is what I have. So how do we add that? Are you getting the problem? So see, I have everything that I need, but how do we add? And if someone were to ask me, what is the value of all your assets? I have no idea what's the value of all my assets, right? We have just used the barter system, exchange ke liye. Now everyone has a few cows, goats, rice, wheat and dal, right? So we are surviving happily, but we don't know how to measure it, right? So that's why the money measurement concept is needed, which is basically saying we should be, at least when we present financial statements, we should be able to measure our assets and liabilities and equity using one common denominator, right? So that's what this thing is. And so when things can be expressed in monetary terms, then you can add and subtract and arrive at one value. Otherwise it's impossible to arrive at ki, I have 1 cow, 1 goat, 85 bags of rice, some bags of dal and some bags of, right? Are you getting the point? So money measurement is important. So matching, what's the matching concept? Matching concept is matching of costs with revenues, right? So yesterday we saw when Sam Doty was preparing his accounts, not Sam Doty, the business was preparing its accounts. At that time we said we have revenues of 3,000, and we said in this period we have also incurred, during the month of September, we have also incurred costs of how much? Costs of 800 for salaries and 200 for rent. So we matched, to arrive at profit, we matched the costs of that period with the revenues of that period, right? And then we said in this period revenues was 300, in this period costs were, not 300, in this period revenues were 3,000, in this period costs were 1,000, so the profit for the period is 2,000. Are we all clear? That's what we said. So that's what the matching concept does, that if you have to determine the profits of the period, then you must not only take the revenue, but you must take all the associated costs for generating that revenue. And there are at times costs that are for the period, that are for the month. For example, if you have taken revenue for the month, let us say there was some cost also, some cost as in like if you sold, this was a consulting industry, if you remember, that was a consulting industry, we were having service revenues, right? It was a service revenue, but what if it was a trading industry, that what if we were selling some garments? So we will say the selling price of the garment was, let's say, 100 rupees, say, and the cost price of the garment was 50 rupees. So if you sell a garment of 100 rupees, you will say 100 ko ek baar 1 lakh kar dete hain for all the garments. So 100 becomes, let's say, 1 lakh, and then 50 becomes 50,000, right? So you have this. These are the direct costs of, this is what is called as the cost of goods sold. This is for a manufacturing company or a trading company. This will be called as, because yesterday's example was for a service business, right? Service business, we saw that, right? You understand the difference between goods and services, right? So that was, so we will subtract not only the cost of goods sold, and then we will say, in addition to the cost of goods sold, I also have this showroom where I am paying 200 rupees of rent, right? I also have staff to whom I have paying on a monthly basis 800 rupees, right. So, I will subtract not only the cost of goods sold, but also the costs incurred during the accounting period. Let us say we were doing accounting on a monthly basis, then the costs incurred during the accounting period for salaries for staff, for rent for the showroom, they are all to be subtracted, right. So, that is what we do. So, that is the reason we match costs with revenues. One, there are two types of cost: directly associated cost, cost of the goods sold 50,000, and cost of the period, accounting period, which is 800 of salaries and 200 of rent. Are you all clear on that? So, we will match both against the revenues, and then we will have the realization concept. And realization concept, it is a very big IFRS which has now been completely remodeled. So, which is totally beyond the scope of this class, but to put in the simplest terms, when it comes to, for the purpose of our class, when it comes to goods, we will say goods, we will recognize the sale of goods when the goods have been delivered, and when it comes to services, when the services have been rendered. So, we will recognize the sale when the goods have been delivered. So, if I was selling a phone to you, so the moment I give the phone to you, I will say sale ho gaya, because he is now duty bound to pay me, right. Either he has to pay me right now cash, or I will record, if he gives me cash, I will say cash up and sales ho gaya in equity, or if he will pay me later, then I will say not cash is up, but accounts receivable, debtors, you remember that, the opposite of creditors or accounts payable, which we discussed yesterday, right. So, we will say accounts receivable or debtors is up by 10,000 rupees for the phone. You got it all? Yes. What is the conservatism principle? The accountants are conservative people. Accountants are conservative people, right. What is their basic nature? They are not risk takers. Accountants play very safe. Accountants play very safe. They bet like Rahul Dravid. If out nahi hona hai. Got it? Accountants bet like Rahul Dravid. Out nahi hona hai, khelte jana hai. ठीक है? So, that is what they do. So, what do? Is they do not play like Virender Sehwag. You remember the difference? So, they will not anticipate any gains or profits, but they will provide for all possible expenses and losses. Accountants will not provide for any gains or incomes like anticipated ones. Real to karna hi padega, but they will provide for all possible losses. So, for example, if there is a decent chance that we may incur a loss, they will say let us make some provision for that loss, right. But if there is a chance that we may make some profit, they will say hold on, we will realize the profit at the right time when you actually make the profit, but when it comes to losses, they will say let us make some provision for the losses. Are you getting? So, they will be very, very conservative in the recording of transactions, right. So, if since because they are so conservative, it may result in an understatement of profits, right. So, that is one of the principles of accounting, and consistency principle is once a choice is made, you are supposed to follow it. ऐसा नहीं है कि for example, the example that I gave was for a straight line basis of depreciation. When I said कि car worth 10 lakh rupees, the life of the car is 10 years. So, we will have 1 lakh rupee per year of depreciation. That is something called as a straight line basis of depreciation. There are other ways of depreciating the car also, right. So, let us without, and because that is for a later day, but let us say there is another basis of providing for depreciation called as, let us say, written down value. So, if you are following a straight line basis of depreciation in 1 year, then it is expected that you will continue to follow it over the years. There has to be a very strong reason for business to change accounting policies. If you are following the written down value basis of depreciation, then you should continue to follow that, right. But you can't do in year 1 I will put straight line basis of depreciation, in year 2 मूड चेंज हो गया है, ठीक है. तो अब year 2 में मेरा मूड नहीं है, अब मैं रिटर्न डाउन वैल्यू डालूंगा. In year 3, अच्छा, this year I feel like putting some other method of depreciation. That is not allowed. So, the principle of consistency says once we choose a method of recording, the same should be consistently followed, like accounting principle should be, policy should be followed consistently, and we should, unless there are strenuous circumstances which force us to change, in which case we can change also. It is not that it is not allowed, but it should be allowed for some good reason, not कि यार मूड नहीं है अभी, ठीक है ना. Materiality concept. What is the materiality concept? Materiality concept says, अच्छा पहले मैं example दे देता हूँ, then you will understand what is the concept. This equipment that we bought yesterday at 4,000 rupees was clearly an expensive item. Let us say the life of this equipment is 4 years, let us say. Then we, how much depreciation should we charge for this equipment? 1,000 per year broadly. If the life of the equipment is 4 years, cost of the equipment is 4,000, then we should charge depreciation 1,000 per year, because it is a useful asset. Pencil. Pencil is a very useful asset. We write with a pencil. Pencil दो यार, pencil दो. कितने में खरीदी थी? 5 rupees. He bought this pencil for 5 rupees, and pencil is a very useful asset. Why? Especially when you don't have a pen, right? So pencil is an extremely useful asset, and he spent as much as 500 paise for it. 500 paise, not a joke, right? And he will use this pencil not just today, but for next 3 years, because most of the time he uses the pen only. Now 3 years नहीं, 5 years करते हैं. So he bought this pencil for 5 rupees and he will use it for 5 years, because most of the time he uses pen. So the cost of the asset is how much? 5 rupees. What is the useful life of the asset? 5 years. So how much depreciation shall we provide? 1 rupee per year, right? So the depreciation is 1 rupee year. So he will show, how will he account for it? हर साल बोला at the end of year 1 5 रुपए से 1 rupee depreciation, so now it is 4 rupees. At the end of year 2, so this is how we will account, right? Year 1 5 rupees at the beginning, huh? And then minus 1 depreciation, तो 4 rupees. Year 2 में क्या हुआ? Another 1 rupee of depreciation and 3 rupees. Year 3 में another 1 rupee of depreciation and 2 rupees. Year 4 another 1 rupee of depreciation, now its value is 1 rupee. Year 5 another 1 rupee of depreciation and now the value has become 0. उसमें भी क्या होगा कि value 0 नहीं होगी. There is a salvage value. So if you see any asset has a salvage value also. So इतना सा जो टुकड़ा रह जाएगा पेंसिल का, that itself is worth at least 10 paise. Are you getting the point? So how shall we account for that 10 paise then? Salvage value. So that's the reason what the accountants say कि यार क्यों इतना माथा लगा रहे हो 1 रुपए के लिए. Are you getting the point? So they say if something is not material, then don't bother accounting. It's an asset, true, but if something is not material, then let's not bother accounting for it. कि 5 रुपए का expense दिखा दो in year 1 itself and close the topic. Are you all clear? Just show an expense of 5 rupees in year 1 and close the topic. क्यों? Why should the topic be closed? So what's the periodicity concept? The periodicity concept is a company will break up its economic activity into artificial time periods. So you may be aware that in India we have the annual year as 1st of April to 31st of March, right? This is an artificial time period. Somebody decided, people sitting in ministries, it should be 1st of April to 31st of March for everyone. So everyone does accounting based on that. If they had said, you know, it should be 1st of January to 31st of December, we would have done accounting based on that. And if they had said, no, 1st July से 30 June होगा आगे से, so we will have to follow that also, right? It doesn't matter what time period you choose, but for the period of accounting, you still have to choose one beginning point and one ending point, right? Our class can start from 10:45 to 12:15. It could have very well be 10:30 to 12. How does it matter? 1.5 घंटे की क्लास थी. right. So, we can just choose any point of starting point and any ending point, but we need some kind of a. So, it basically you can choose any activity within the calendar, and that was the song I wanted to play. भाई मेरा नाम है calendar, मैं तो चला कितने calendar, right? But so that's the point, that the periodicity concept is basically based on some aspect of a calendar. You can choose first. Reliability concept is basically saying, you know, whatever data that we present should be reliable, and tax authority shouldn't come hitting us कि ये क्या कूड़ा accounting किया है, and that's the reason we have auditors who will check the reliability of data that we provide, whether you have enough evidence to support. You can claim I bought a Mercedes car at 45 lakh rupees. बोला हमें तो कोई Mercedes नहीं दिख रही, right? Are you getting the point? Yes. So, where is the Mercedes car? If you are claiming that the business bought a Mercedes car, where is that car? Where are the bills of the car, right? So, that is what the reliability concept is, that you must provide information that can be, that is reliable. Monetary unit we have already discussed, right? Yeah. So, these are examples: inventories, investments, depreciation, goodwill, contingent liabilities, foreign exchange transactions, and CNC. So, for every aspect of asset or liability, we will have some accounting standards or guidelines issued by the Institute of Chartered Accountants of India, which we are supposed to follow, right? Yeah, we will now work on the. So, yesterday we saw, everyone get ready, everyone with your notebook and pen. Yesterday we saw assets equal to liabilities plus equity, right? That is what we saw, assets equal to liabilities plus equity, and it can also be written this way: if assets equal to liabilities plus equity, then assets minus liability is equal to equity. So, in that way you can look at equity as a residual claim of the owner. You can look at equity as the residual claim of the owner. What is a residual claim? That we said everything that is in the business belongs either to insiders or to outsiders, right? Insiders are owner, outsiders are separate, right? So, everything that belongs to business belongs either to outsiders, everything that belongs to business belongs either to outsiders or to insiders. And if you subtract the share of outsiders from the business, then that is what we are left with, is the insiders share of business, right? So, this is called, when you say assets. So, once we, so effectively it is saying that first you pay off outsiders, उसके बाद जो बचा वो तुम्हारा. First you pay off outsiders, उसके बाद जो बचा वो तुम्हारा. Are you getting it? So, that is the reason it is called that our owner's claim is a residual claim. Owner's claim is a residual claim after paying everyone else, right? And that is what this equation is. The same equation is now saying that owner's claim is a residual claim by first pay everyone else, whatever is left belongs to us, whether profit, whether loss, whatever. Clear? So, it is plain mathematics also, but mentally do you see that pehle we were saying ki whatever is there is in business belongs either to insiders or to outsiders, and now we are saying the same thing, but in a different way, that whatever is remaining after paying outsiders is ours. So, it is a residual claim. The reason is pehle we have to pay outsiders, that is the reason, because if the business was to be closed, then this person who sold this equipment for 4,000 rupees will say कि तुम्हारे लॉस हुआ प्रॉफिट हुआ योर प्रॉब्लम, पहले मेरे पैसे दो. तुम्हारे लॉस हुआ प्रॉफिट हुआ योर प्रॉब्लम, पहले मेरे पैसे दो. Are you all clear? So, that is the issue. So, assets are economic resources that help generate future inflows and reduce or prevent future cash outflows, right, which we kind of already understand. So, just read the theory on your own. Liabilities are obligations to outsiders, and equity we already know is a residual claim, right. So, Lopez has started a business and with 4 lakh investment of his own. So, at the end of this transaction how much everyone, अच्छा ये छोटे छोटे इसके, you don't make separate that table like that. Table is coming up for after a few slides, but इसमें भी you just write down plus this minus this, so that you know कि what has come up, right? So when he does an investment of 4 lakh in business, what is plus and what is minus?
So cash is plus and the equity is like.
And equity, right? Share capital or owner stock is minus, right? And then he borrows 1 lakh from a bank. Then cash goes up or down? Cash goes up 1 lakh. And liability is created, right? Bank has to be paid. The moment you close the business, bank will come knocking on the door, paise do, right? So bank has to be paid. So bank liabilities. Is there anyone who is not understood? Are you all clear? So this I have already explained, that the owner's equity equal to assets minus liabilities, which is the residual claim. This I have already explained, right? The other name for owner's equity is net assets. That is, assets minus liabilities is also called as net assets, which is also called as owner's equity, right? Yeah. So let's do. We have already explained what is an entity, what is a transaction, so we are moving forward. So every transaction affects balance sheet. Yesterday also we have seen it, that the moment a transaction happens, it has two aspects. Did you notice that? Today we will notice it again. Yesterday, whenever we said that cash is going up, something else was also, either some other asset has to go down or some liability goes up or equity goes up. So when cash goes up, please, when you do accounting today, we didn't do it because we were preparing it for the first time. Today, you will also look at the double aspect of accounting. When you do accounting today, please also look at the double aspect of accounting, that every transaction has a corresponding impact somewhere else. It will never happen that cash went up, nothing else. नहीं हो सकता. Are you getting what I am saying? So every transaction will have at least one more impact, and those are called simple entries. At times one transaction can have more than two impacts. In those cases they are called complex or compound entries, right? So we will not pass any entry. The good part about this course is we will learn accounting as mathematics and not as accounting, ठीक है ना? Because we are managers. So we have something called as double entry accounting system. We will not even pass debits and credits because that's too much for this course, because then it gets very messy, and then people get confused. But if you only look at analysis, the course is called financial reporting and analysis. So we will analyze. बैठ के अच्छा क्या हो रहा है, अप हो गया, डाउन हो गया, अप हो गया, डाउन हो गया. So you should be able to understand as managers. You don't have to pass journal entries कि cash account is credited, we bought an equipment, so equipment goes up, so equipment account is debited, and cash goes down, so cash account is credited. You don't have to worry about it, right? What you have to worry about is at the moment you buy an equipment, my cash goes down, my another asset equipment goes up. So that's enough for a manager. That's enough for a manager. For an accountant that's not enough, but for a manager that's enough. And we are managers, right? We are managers. Who are we? We are future CEOs, future CFOs, future CIOs, future CMOs, right? We are not future accountants. They are all studying at Institute of Chartered Accountants of India, right? So let's, अब लिखना शुरू करो चलो. The कम से कम landslide mode, not you choose. So it will really help. Landslide mode में करो, portrait में मत करो. It will help. 8-10 transactions आ रहे हैं, right? So now let's. अच्छा sorry, this is correct, yeah. Investment of 4 lakh by a owner in a business bank account, right? So when the owner invests 4 lakh, cash and bank is usually taken as same in accounting. Cash and bank is usually taken as same. Cash and bank to same है, ठीक है? So when owner invests, what's the name of the owner? Lopez. So when owner invests capital 4 lakh, then cash goes up or down? Up 4 lakh, right? Cash up 4 lakh. And is there any impact on liabilities? No. Is there any impact on equity?
Yes.
Yes. What is the impact? Equity goes up or down? Up. Are we all clear? तो चलो लिखो फिर. So everyone prepare your tables. इसमें एक एक ट्रांजेक्शन आएंगे आज. Yesterday you were seeing the consolidated picture. Now you will do one at a time. But at least have assets. 4-5 कॉलम रख दो assets के. Then liabilities 2-3 कॉलम liability के रख दो. Equity उसके 2 कॉलम रख दो. So that should be enough, right? Are you all clear? क्या करना है? Just like yesterday, prepare those many tables. Landslide will be better than portrait. Signed in bank loan agreement for 1 lakh. Also, so in the US, bank loan will be called as notes payable. This is US terminology. In the US, it will be called as a bank loan, right? And notes payable. So you can call it bank loan, as simple as that, right? So what happened? We have signed a bank loan agreement. So bank has given us cash or put money in our bank account. So cash is up. Cash is up how much? 1 lakh. And is there, will the bank leave us, ki jao enjoy yourself with the money, or at some point bank will come pay my money back? Pay my money back, right? At some point we have to pay the money back. So there is a liability. The business has to pay the bank how much? 1 lakh at some point of time. So a liability goes up, right? So liability is up. Which liability is up? You have to write bank loan, right? They are calling it notes payable, but you can write bank loan. Are we clear? At the end of this transaction, is the accounting equation balancing? Did you notice that every transaction has 2 aspects? In this case, an asset went up. When an asset went up, another liability went up. See, there are only 3 possibilities. If an asset goes up, assuming it's a simple entry, compound entry means there are other possibilities, but if it's a simple entry, and most of the entries you see are simple entries, and a compound entry can be broken down into 2 or more simple entries. Okay? So when an asset goes up, either some asset has to go down, तब जाके balance होगा, or liability has to go up, or equity has to go up. Are you getting what I am saying? तराजू है, तराजू, ठीक है ना, तराजू. When an asset goes up, तो ये भारी हो गया, right? इधर weight ज़्यादा हो गया. So either some liability has to go up, ठीक है, और equity has to go up, तो वो भी बढ़ गए. और अगर ये इधर ही है, तो some asset, if one asset goes up, then another asset has to go down, तो वो तब जाके balance हो. Are you getting what I am saying? So balance तो होना पड़ेगा. I have already proved yesterday assets equal to liabilities plus equity. Balance तो होना पड़ेगा, तराजू है, right? So the moment one side goes up, to balance you have to put either weight here or to reduce some weight here. Are you getting it? So when one asset goes up, either some other asset will go down, or liability will go up, or equity will go up. So please, I will not necessarily state it every time, but please start analyzing the double entry aspect of accounting in your mind every time from now onwards. I will not state it explicitly every transaction, because I did it yesterday. जैसे स्पून फीडिंग किया था ना कल, अच्छा लगा, ठीक है. तो I won't, because इतना स्पून फीडिंग करेंगे तो we won't be able to proceed, but it is important on day 1 at least to get a grounding, at least कि हाँ ground floor बन गया था, right? So please analyze it yourself on your own, whether I say it or not. What are the things you will analyze? That yes, at the end of this transaction, I have silently noted that the accounting equation still balances. Assets is still equal to liabilities plus equity. What is the other thing you will analyze? That yes, if one asset goes up, then another asset has gone down, or if one asset goes up, then liability has gone up, or if one asset has gone up, then equity has gone up. Are we all clear? And similarly, if one asset goes down, corresponding things, right? So if one asset goes down, then another asset has to go up. If one asset goes down, then liability has to go down, or if one asset goes down, then equity has to go down. But the accounting equation must balance. What are fixed assets? In the US, उनकी नौटंकी ज़्यादा होती है, right? So they will call a fixed asset as a long-term asset or a long-lived asset. In India also we call them as long-term asset, but long-term and long-lived is same. and so that is also a fixed asset. So, there are two types of assets, there are many types of assets, but broadly there are two types of assets. Assets that you expect to use for more than a year are fixed assets. What are the examples of fixed assets? Machinery, land, building, chair, table, furniture, fixture, everything. Yeah, all these things you expect to use. When you buy a chair or a table, we expect that for next 10 years or 20 years we will use it. I know some of you will break it, but that is a separate issue. But our expectation is we will use them for 10 years or 20 years, right. So, these are called as fixed assets, and for fixed assets we already know how to depreciate, right, that is a separate topic. So, what did we acquire in this particular case? We have acquired some equipment for 15,000 cash. When we acquire an equipment for 15,000 cash, then what is happening? Cash goes down. Cash goes down. What is the impact? Look at 3, right. You can write 3 for that, you do not have to write the full thing, you can write 1, 2, 3 all, right. So, cash goes down by 15,000 and equipment goes up by 15,000. Accounting equation still balances, and there are double aspect of accounting is also being noted. 2 aspects of accounting, double aspect, right. And so, here they have done the balancing at the end of every round, which you do not have to do, but you still have to pass the entry, this entry, right. So, what did we notice? There is increase in one asset, decrease in another asset, cash, increase in one asset, equipment. Yeah. So, account is a summary, just as so if you look at account is basically a summary record of changes in a particular asset, liability or equity, and account balance is total of all entries in the account to date. So, let us go to the previous slide. In the previous slide, cash, these are all the account of cash and this is the balance of cash. Okay? Are you getting it? This is the account of equipment and this is the balance of equipment. So, this is what we are saying in the next slide. Next slide. That account is a summary record of changes in a particular asset, liability or equity, and account balance is that final last row that we prepared yesterday, which we said is representing our balance sheet. That is the account balance, right. For each transaction, the accountant determines which specific account the transaction affects, whether it increases or decreases that account, an amount of change in each accounting balance, right. This is what we have to do. This is what we have already done yesterday. I am just explaining ekdam in even greater detail what we did yesterday through another example today, so that you are ready for what is coming up. Accounting, inventory. What is inventory? Inventory is goods that you buy for the purpose of resell. So, if you are in the business of selling shoes, let us say you have a small shop of shoes, then for you inventory is shoes. So, you will have thousands of ladies shoes, thousands of gents shoes, thousands of kids shoes, and then you will sell them. So, your inventory will represent, let us say 5,000 ladies shoes, 5,000 gents shoes and 5,000 children's shoes. Are you getting that? So, that is your inventory. Inventory are the products that you intend to sell. Any questions? Okay. So, what did we buy this time for inventories? We acquired products from vendor for 1,20,000 cash. How much inventory we have bought? 1,20,000, lot of money has been spent, cash. So, which means cash has gone down. How much has it gone down by? 1,20,000. And what has gone up? Inventory has gone up. So, cash, inventory, cash has gone down by 1,20,000, inventory has gone up by 1,20,000. The other name, the same as merchandise inventory and inventory are same. Just it is derived from the word merchants. The merchants used to buy and sell things. So, it is the reason it is called merchandise inventory, right. So, cash is down 120, inventory is up 120. At the end of this transaction, the accounting equation is still balancing, and the impact of this transaction is one asset has gone down, another asset has gone up. You are noticing all of that, right. Whether I say it or not, you are still noticing on your own, right. I will keep saying, but henceforth even when you are solving problems at home, you will still notice that So while solving, you will keep noticing कि हाँ, one asset has gone down, one asset has gone up, and at the end of this transaction, my accounting equation is still balancing. So you will, every time you will continue to see, हाँ, this is my balance sheet, because whatever is the balance is, if you are asked what is your balance sheet, if you are asked what is your balance sheet, then you will say this is my balance sheet. Are you getting what I am saying? The account balances that you see on the accounting equation, this represents your balance sheet. That is what we saw yesterday, right? So this is my balance sheet. So if somebody says, a chartered accountant says कि तुम्हारी balance sheet में क्या क्या है, तो you will say कि I have 3,65,000 cash, I have inventory of 1,20,000, I have equipment of 15,000, and so I have like 5 lakh of assets, and then out of 5 lakh I have, when we say I, the business, right, we have to pay to the bank 1 lakh, and the balance 4 lakh is ours. Are you getting it? So this is your balance sheet also, right, which we prepared at the end yesterday, but here you can see, we have just prepared it one more time, assuming it has ended. So this is the balance sheet. अगर नहीं end हुआ है तो let's continue. So I already explained yesterday that when you buy something, you can either pay immediately or you have to pay in future. When you buy something, you either pay immediately or you have to pay in future, because he is not your chachaji, right? He is not your chachaji, that he will give it to you for free, right? Even chachajis these days don't give for free. That's another issue, right? वो बाद में है. I am not commenting anything on my chachaji. He is a very nice person. Okay? So coming back. So when you buy something, you have to pay for it, right? Free में कुछ नहीं मिलता है, right? And there is no free lunch. And when you go to semester 3, you will have a subject called financial management. There you will be introduced to a term called arbitrage, and the essence of arbitrage is there is no free lunch. Open account, buying or selling on credit, usually by just an authorized signature of the buyer. Account payable, we have already seen it yesterday, right? Account payable, a liability that results from a purchase of goods or services on open account. So I have already explained it yesterday. When you buy something, you pay either cash now or you pay cash in future. There are only two possibilities. Free में तो कोई कुछ नहीं देता. Yeah.
So rate of interest भी होगा. How will you add that in the
Rate of interest when you buy.
when we repay the loan or whatever,
हाँ.
there will be the rate of interest.
हाँ.
How to add this?
You have to add. For example, bank loan.
So where we have to add it?
हाँ, bank loan में तो. So let the first installment come. So what we will do all these transactions, and then we will have a last. अच्छा अभी करते हैं क्या? नहीं, but अभी करेंगे तो अपना वो सबका बैलेंस शीट गड़बड़ हो जाएगा. Let's prepare our balance sheet based on the 7 अभी जितने भी transactions हैं, and then I will include one more transaction at the end, which is interest. But to put it very simply, we have taken the loan of 1 lakh rupees from the bank. That is principal. Yesterday we said, Rahul कहाँ है? उस क्लास में है क्या? In this class you don't have. So who gave money to whom? 1 lakh yesterday to start the business? Yeah, you look like you are the person who took the loan. And where's you gave the loan? And what was your concern yesterday? So you had two concerns. You have two concerns. First concern, of course, that is the bigger concern, repayment of principal. And second concern is till he repays the principal, whether he will pay me interest. You had two concerns. Third concern nahi tha, right? So bank also has the same concern, whether the person will repay my principal and whether the person will repay my interest on a timely basis, right? So when we repay principal to the bank, when we took money from the bank, we said cash is up and another liability, bank loan, is up. When we repay money to the principal, to the bank, we will say cash is now down because 1 lakh has gone down from business and to the bank, but a liability 1 lakh has gone down. Are you getting? That's for repayment of principal. Now your question is, वो होगा 5 साल बाद, ठीक है? Now your question is, every year bank is asking me to pay 10% interest. I have taken loan say on 1st of January, then on 31st of December I have to pay to the bank 10,000 rupees interest, 10% interest. Got it? So on 31st of December when you pay interest to the bank, cash goes out, cash goes down, cash down minus 10,000, interest is an expense for you, right. So, you will say interest expense when cash is going down, you will charge it to your interest expense, which will actually reduce your retained earnings. Under retained earnings, it will be minus 10,000, because your profits, if you have earned a profit of say 50,000 during the year, if till now no other transaction left, and then you realize अरे 50,000 profit तो कमाया लेकिन बैंक को 10,000 interest भी दिया. I made a profit of 50,000 during the year, but I also paid to bank interest of 10,000 rupees. So, my profit for the year or retained earnings, as we said yesterday, has gone down from 50,000 minus 10,000 to 40,000. Are you seeing what I am saying? So, that is what we have already understood, right. Whether we do it or not, we have all understood that. Purchased inventory for 10,000 on credit. Last time what did we do? Last time we purchased inventory for cash plus 120 हो गया था inventory minus 120 हो गया था cash, right. Today what we have done? Now we have purchased inventory on credit. So, does cash go up or down? When inventory is purchased on credit, cash is not affected, right. So, but inventory still goes up.
Yes, sir.
Inventory still goes up by how much? 10,000. But since we did not pay now, we have to pay in future.
Yes, sir.
So, we have to pay in future means a liability has been created. What is the name of this liability? Accounts payable or creditors? Accounts payable or creditors, right. Are you all clear? If, so did you notice that when one asset went up, a liability went up? If we had paid cash, there would be no liability. In that case, one asset went up 10,000 and cash would have gone down by 10,000, right. But since we agreed to pay in future, it is bought on credit. So, one asset has gone up, but at the same time a liability has also been created. Are you all clear? So, at the end of this transaction, this is our balance sheet, and we have silently noted that yes, accounting equation still balances, and also noted that yes, every transaction has at least two aspects, right. Compound entry affects, just now I said na ki we have simple entries which affect only two, which only have two aspects. We may also have compound entry. The truth is, a compound entry can be broken down into two simple entries. A compound entry can be broken down into two simple entries. Actually, it may be more depending on how complex or compound it is, but if it is a normal compound entry, let us look at this. It can be broken down into two simple entries. Bought product from vendor for 30,000, and how much, what is the entry? The agreement is down payment though 10,000 and balance 20,000 after 30 days. Down payment though 10,000 and balance 20,000 after 30 days. Can you see that? Yes. This is a compound entry. Why? Because inventory is going up by 30,000. Can you see that? When you buy inventory of 30,000, whether you pay cash, whether you buy it on credit, inventory is still up by 30,000. Yes. So, inventory is up 30,000, but this time we are saying cash is going down only by 10,000. So, cash is down 10,000 and for the balance you have to pay later. So, it is a liability. Accounts payable is up 20,000. So, please note that this compound entry can easily be broken down into two simple entries. The first simple entry, it is equivalent to saying two separate entries. Is it not the same as that? Just see what I am saying. I am saying I bought 10,000 of inventory using cash, entry number 1. Then I am saying I bought 20,000 of inventory on credit. Is it not the same? Effectively, from accounting perspective, it is the same entry. Yes, I am saying I bought 10,000 of inventory using cash, and then I am saying number 2, I bought 20,000 of inventory on credit, and this is exactly the same as that, right. So, the compound entry can be broken down into two simple entries. Are you getting it? So, what did we do? We bought, look at number 6. So, this was the number 6, right. So, inventory was up 30,000. In the compound entry case, inventory was up 30,000 cash was down by 10,000, we paid 10,000 cash down payment, sold store equipment for 1,000, right. Store equipment we had bought for how much? 15,000, right. So, not the entire equipment, let us say we had bought 15 items or something. So, it is not that entire 15,000 has been sold only for 1,000, it is not that. We have sold a part of the equipment for, a small part of the equipment for 1,000, right. So, when we sell equipment for 1,000, then cash goes up or down? Up. And the value of equipment has gone up or down? Down. So, one asset, do you notice that after this transaction, in transaction number 7, transaction number is anyways written at the top, which you are noticing, right. I am not telling you what is serial number now, right. So, transaction 7, serial number 7, you see here 7, right. So, as a result of transaction 7, store equipment is down 1,000 and cash is up 1,000. And what you have also noticed is, when one asset goes down, another asset goes up. What you have also noticed is the accounting equation still balances, right. This you are, today I will speak, tomorrow onwards I will not. This you have to observe simultaneously on your own, because I can't keep talking the same thing, right. So, but you will have to keep observing every time, yes, it is working, yes, it works, yes, it works, right. So, are we sure what we have done? Asset has gone up, cash, another asset has gone down, equipment, right. Return to supplier 800 worth of goods purchased on credit. Yeah, at times what will happen is, you will buy goods that are defective, right. So, in such cases you will say, I paid full money for it, why should I take defective products, right. You will say, take back your defective product. So, either in such a case, either the person will refund you your money or he will give you some good product, right. So, when you get a defective product, you will go to the shopkeeper and say the product is defective, refund me my money, or are you getting it? So, in this case, inventory worth 800 has been returned. So, balance of inventory, when inventory has been returned, does the balance of inventory go up or down? Down. And since the balance of inventory has gone down, is it possible that there is no other impact? There has to be a double entry. There has to be a double entry. What is the second entry? So, we were supposed to pay 30,000 rupees to the shopkeeper or the vendor, right. We are supposed to pay how much? 30,000. Once we return goods worth 800, do we still have to pay him 30,000, or we will say, Bhaiya, 30,000 I was supposed to pay, but 800 worth of goods I have already returned to you. I am not supposed to pay 30,000 anymore. I am only supposed to pay 29,200, right. So, we will say 800 of goods worth returned. So, your balance has gone down from 30,000 to 30,000 minus 800, right, which is 29,200. At the end of this transaction, does the accounting equation balance? As a result of this transaction, did we notice that when one asset went down, another liability went down, right? We have noted. So, we paid how much to vendor for credit purchase? Accounts payable was how much? At this point 29,200 or 30,000 minus 800, right? And now, we are saying कि we were supposed to pay him. He will say, बेटा पैसे भी दे, goods return तो कर रहे हैं, पैसे भी दे मेरे. You are supposed to pay me, right? Yes. So, we paid how much? 4,000 rupees, right? So, when we pay 4,000 rupees cash, does cash go up or down? Down. When we pay 4,000 rupees cash to our creditor, earlier we were owing him, let us say 29,200. Now, we have paid 4,000 cash to him. Will we still have to pay him 29,200, or shall we pay only 25,200 in future? We shall only pay 25,200 in future. So, cash is down 4,000 and accounts payable is also down 4,000. We see that every transaction has two aspects. One, cash has gone down, asset has gone down, liability also has gone down, and at the end of this transaction the accounting equation is still balancing, right? Hi, this is Dr. P. Sanjay and I am a professor at Indian Institute of Management, IIM in Sirmaur. If you like my videos, please feel free to subscribe to my YouTube channel. Thank you.